Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Adam Sarhan, author of Psychological Analysis for Investing and Trading. Adam, it's great to see you again. Welcome back to Trade Talks.
Jill, it's a pleasure to be here. Thank you so much. And I'm very excited. The new book, Psychological Analysis, is #1 on Amazon. So I'm very, very excited about that.
That is awesome and a great way to kick off 2022. And Adam, you and I have spoken about this for a number of years. If it was just fundamental and technical analysis, everyone would be rich, but of course that's not the case. And again, something that we've been covering for probably over a decade at this point. When it comes to psychological analysis, what are the two main parts?
Sure. There's the first part, Jill, is to know thyself. Everybody has strengths. Everybody has weaknesses. In the book, I actually have cartoons that illustrate, think of the good side and the bad side. So what I call the good side is a smart money superhero. And the bad side, I call him the dumb money beast. And it came from when my daughter was really young, which, by the way, today's her 10th birthday. So happy birthday to Sophia. She didn't want to brush her teeth one night. She was 4 years old or 3.5, something like that. And, you know, when a kid gets into a fit in that state, they're not really thinking logically. They're just emotional. And the right thing to do as her parent and for her is to brush the teeth, but she didn't want to brush her teeth. So I stood up and I got really silly and I said, schmelf, like that. And I made this thing as if I'm stepping on an ant. And that was the creation of schmelf. And in our house, anytime anybody gets sad or upset or gets in that emotional state, not logical state, we joke around and say schmelf and it snaps us out of it. And that's the basis of this dumb money beast in the book. So I call him schmelf in the book as well. And the whole idea of the book, Jill, is to teach you how to bring out the smart money superhero so you can step back, overcome your weaknesses, and make logical and rational decisions, especially with your money when the bullets are firing all day long on Wall Street. And that's really the big principle. The other side of it is to know the psychology of the market and outsmart the market psyche.
So Adam, let me ask you this. Again, as I mentioned before, you and I have been talking about this for a number of years, but since then, when we first met at MarketSite, we have, we've went through a pandemic. We have this influx of retail trading, which is really lending to a lot of volume. Meme stocks and different social media platforms are lending to the volume that we're seeing in the market. Does that philosophy still apply as the market changes, whether it's through market structure or just the composure and the attitude of investors changes?
Oh, great question, Jill. Yeah, this is timeless. So everything I do in this book and in my podcast, Smart Money Circle, the show that I do where I interview large money managers and CEOs for timeless investing advice, is that it goes back to human nature. Human nature never changes. I've gone back and studied every major bull and bear market in the last 100 years, every major economic cycle, boom and bust, going back to the 3rd century. And the players change, the actors change, the centuries change, but the one constant's human nature. So if you say, hey, Adam, wait a minute, if human nature never changes, how do you get better? Well, the whole idea is that human behavior does. Just because you did something silly when you were a kid or 10 years ago or 5 minutes ago, for that matter, doesn't mean you still have to do that now going forward. And that's the real premise of the book, is to give you the tools needed to help you change your own behavior and then be aware of what think of like triggers, where if you walk into a crowded theater, yell fire. Anywhere in the world, doesn't matter your language, your race, your religion, your socioeconomic level, whatever the case may be, any point in history, people are going to run. Well, the same thing in markets. If you make a lot of money from a trade, you're happy or you sad? People are happy, or enter any other positive emotion. If you lose a bunch of money on a trade, are you happy, or you angry, or rage, or upset, or frustrated, or any other negative emotion, and so on and so forth. So these things are just timeless principles, Jill, that apply to not just trading today, trading back when there was a pit, but also going back and trading in the future as people start trading from their phones. And I was on a plane the other day, and the guy's placing trades on a plane. So, now human nature is it's on display all day, every day. The barrier to entry is so low, zero commission trades, that just about anybody can trade. And this applies to any freely traded market. That stocks, bonds, currencies, real estate, crypto, Bitcoin, it doesn't matter. As long as it's a bid and an ask and it's a freely traded exchange where it's based on an auction and emotions and price moves up and down freely, these timeless lessons apply.
And these lessons can also be applied in conjunction with fundamental and technical analysis. That's not to say that they don't matter at all.
Oh, actually, 1,000%. That's a really good point. I have 2 chapters in the book dedicated to how to trade, how to use fundamental analysis like a pro, and how to use technical analysis like a pro. Absolutely. I mean, I couldn't emphasize, I'm a huge fan of both schools of thought. Think of like a Venn diagram. There's good in technical analysis, there's good in fundamental analysis, and then there's overlapping, there's really good. And then think of the circles, there's a third piece that's missing, and that's where the psychological overlaps as well. And that's the whole thing. But yeah, the fundamental analysis is critical to understanding what you want to trade, understanding the big themes, whether it's a stock, understanding the story, a macro environment for currencies or whatever the case may be. And then technicals tells you when to get in, when to get out. The thing is, though, Jill, as you know, I think when we first started talking, the Nasdaq was like at 3,000 or 4,000, which is, it's been over a decade. And what we've seen over the last 10 years together in real time has been this explosion of individuals, retail trading. Last year was the year of the meme stocks. The two strongest stocks in the market were like AMC and GME because that whole meme explosion. And what happens is now is because people trade from their phones and there's no barrier to entry and everyone can go in and make a lot of money because we're in a bull market and everyone thinks they're a genius in a bull market. What's happening now, Jill, is that you see these patterns that used to take time to unfold. These cycles are happening much faster. And that makes it even more important to understand the psychological analysis, understand your own psyche, what your strengths are, what your weaknesses are, so on and so forth. The other side of the book that's really interesting too, Jill, you ever do something and hit a wall?
All the time.
We all have, right? Who hasn't? I call these mental walls. And I have a whole section in the book dedicated to A, identifying your mental walls, and then B, learning how to destroy them. So there's what I call the learning cycle. You learn something, you plateau, and then you hit a wall. Then most people stop and they keep going down. The top 1%, they expect that, they anticipate that wall is going to happen. Then they study how to break through that wall and then get to the next set. They level up again, and then they hit another wall, and then they break that wall down, and so on and so forth. And that's another big part of the book. So it really teaches you how to make smart, logical, not emotional decisions, especially when it comes to your money.
And I think it makes a lot of sense because so many times you hear, oh, it was so different trading in the late 90s, early 2000s before we went to decimalization and everything got digitized. It's not the way it used to be 15, 20 years ago. You hear that all the time, but make such a great point with what you're saying where you level up. Okay, well, let's learn how to trade with the machines. Let's learn how to trade with the influx of retail investors that are coming into the market. So I think that's really key what you said there, that, the market's going to evolve regardless if the trader does or not, right? So right. I think that level up premise makes a lot of sense. Yeah,
actually, Leo Melamed, who the gentleman who literally invented stock market futures and currency futures and bond futures, he's the former chairman of the CME. Now he's the chairman emeritus. He wrote the foreword for my book and has been a big inspiration, a big hero of mine. He's a Holocaust survivor, super, super brilliant man. And he told me the story of how he literally invented stock market futures. He went to Milton Friedman, who at the time was a huge economist and everyone even respected him. And he said, hey, what do you think about this idea? He liked it. He approved it. And then he went to the Federal Reserve and he lobbied DC and Washington. And then finally he got it approved. But to your point, Jill, when he came over from Japan, when he left Poland and he went to Japan, then he came to the States. He literally he fell into the trading by accident. And back then there was no internet. He invented Globex, him and his team, which became the largest, helped CME become the largest futures broker out there. And because of the fact that he was always a forward-looking thinker. And his father was able to help him get out of Poland and escape the Nazis because he was a forward-looking thinker. So in the book, I have a whole chapter dedicated to looking to the right of the chart. Most people are looking to the left of the chart, the patterns, this and the other thing. But really, after you enter something, there's only three things that can happen. It can go up, it can go down, or it can go sideways. So your job as a trader is to really respect risk, which is the most important thing in the world, in my opinion, when you're trading and investing, because there's risk and there's reward. It's just like, it's very simple. The light is on, the light's off. I think in binary terms, I keep everything really, really simple. Again, there's cartoons in the book. And the whole idea, Jill, is to understand if you're not buying Apple stock or you're not buying the Nasdaq or you're not buying LMNOP, what in my mind's eye, you're just buying and selling risk. And the best money managers think in terms of risk and percentages, not dollars. I made a lot of money on this trade. That's going to cloud your thinking. It's like going to a doctor. He's performing surgery on you. He's looking at how much money he's making every time he's doing. It distorts the ability to make good trades. But the top 1% of traders, the ones that are around decade after decade after decade, those people are the ones that think in terms of risk and probabilities and percentages, and not specifically just dollars and cents. Dollars is just a byproduct.
Right. And of course, we can find the book on Amazon.
Yes, or Barnes & Noble, wherever you want to go.
All right, Adam, we appreciate it so much. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.